Good morning, sir. Can you explain me the difference between private equity and venture capital? It is very confusing to me.
Good morning, and don't panic. The difference between private equity and venture capital confuses to most of the finance staff. Let me try to clarify. Venture capital is a financial assistance provided to companies that are at the initial stages of their lives and have the potential to deliver high returns. The venture capital expects its investments to experience exponential growth. It needs to have this kind of return because many of the investments fail. The venture capital fund earns money by acquiring equity in lieu of the investment it makes in the company. Prime candidates usually are the ones with some novel technology or unique business model in relatively newer sectors. eBay, Microsoft, Sun, Google, and Apple are all examples of venture-funded startups.
Thank you, sir. Now I am clear about venture capital fund, but in a similar simple way, please explain me private equity investment.
Private equity firms typically invest in profitable companies. The private equity firm usually makes the acquisitions by loaning the company. A private equity firm wants its portfolio company to continue to grow, so it may add on other synergistic acquisitions and then sell the company to another firm within a few years. Most of private equity firms are realistic and don't expect their portfolio companies to grow by quantum leaps. The confusion between the activities arises as the terms are often used interchangeably, even by those who are practitioners of this form of investment. Is the confusion clear to you about venture capital and private equity funding?
Yes, sir. Now I have no confusion, but normally what is the size of their investment?
Private equity firms almost always buy 100% of a company in an LBO, whereas venture capital only acquire a minority stake, less than 50%. Private equity firms make large investments, at least $100 million. Venture capital investments are much smaller, often below $10 million for early stage.
Also, can you let me know the type of companies where they invest?
Certainly. Private equity firms buy companies across all industries, whereas venture capital are focused on technology, biotech, and clean tech industries.
Further, please let me know the type of funds used by them for investment.
Venture capital firms use only equity, whereas private equity firms use a combination of equity and debt. Please understand, equity above refers to using cash rather than debt, not to shareholders' equity, equity value, or anything else.
Last question, sir. How old are these type of funding?
Private equity investments is not new. In fact, it has been in existence for almost a century and was the domain of wealthy individuals and families. Some of the most famous families like the Wallenbergs, Vanderbilts, Whitneys, Rockefellers, and Warburgs could be termed as pioneer venture capitalists. The Wallenberg family created Investor AB in 1916 in Sweden and acted like venture capitalists for marquee Swedish companies such as ABB, Atlas Copco, Ericsson, to name a few.
Sir, now I know about private equity and venture capital funding, and thanks to you.
What you know is the basic. If you want to study in detail, please contact Institute of Financial Leadership and Management.